Hey guys, welcome back to another video by Fully Informed Trade, or FI Trade for short, knowledge for everyone. My name is Alex Cho, and right now I'm going to be talking about Electronic Arts Incorporated. Electronic Arts continues to fall on the session and has had a significant decline. It has gapped below that 20-day moving average. The volume is extremely low. To me, this indicates, again, that there's nobody willing to bid up the stock, but there's plenty of people willing to offer the stock. This is the worst case scenario, crash scenario you can think of, because it means no market maker is willing to really step in and buy any of the shares. Rather, they're just letting it sit and slide pretty hard. I also want to mention the fact that, again, this is a bear flag pattern, multi-month trend line, and then a break below this trend line right here. This indicates that, again, Electronic Arts is breaking down and continuing its downtrend. So nothing surprising here for Electronic Arts. People often question why video game companies aren't really making a whole lot of money, and the answer is pretty simple. And why would people dump electronic companies, particularly video games? Aren't video games really addictive? Yeah, video games are pretty addictive. The only problem with video games is that they don't have very high. Their market saturation point is extremely low. So what I mean is that the typical person who buys video games, they'll only buy a video game maybe three times a year, maybe 4 times a year. That's probably only worth approximately $200, $180, $240 a year. And what typically happens is that these video games that are bought, the 4 video games people buy, they're usually from 4 different companies. You might see one blockbuster title from each major video game company, and it's unlikely that you'll see people buy multiple video games from the same company itself. So again, the whole point I'm trying to bring out is that not only is the market saturation point extremely low, the market potential for video games isn't extremely high either. And the main reason why this happens is because a vast majority of people who play video games are really under the age of 18. And once you get over the age of 18, a lot of people stop playing video games. People stop buying video games. People get busy, and life goes on. You got things to do. You don't have enough time to play video games. The $60 is a waste of money, because even if you buy a video game, you won't even have the time to play it. So all in all, video games do have a structural flaw in their business model. They take up too much time. There is a very low market saturation point, and people who buy video games are very choosy, and it's not a very fun business to be in when you get compensated about it as well as perhaps a movie company, or maybe even less. People can stick in front of the same video game for 3 years at a time, and it might take a long time for a consumer to be willing to come back and buy the next iteration of a title. So all things considered, video games are a pretty tough industry to be in. Sometimes I think video games can be extremely unprofitable if you can't make enough sales based on the research and development you've put into it. And it's been this way for many years now. People just aren't as excited about video games anymore. So that does it for me for today, guys. If you guys have any questions, leave a comment right below. And I hope you guys make money every single day of the year. But besides that, I think the main point I was going to try to say is that this stock is an easy shorting opportunity. You could sell short this stock, and all you would have to do is sit back for a couple of months, and it's pretty obvious where the stock is going to be in a couple of months, just much lower. So anyway, that does it for me for today, and I hope you guys make money every single day. So take care.